stocks are the ones which are declining in today's trading session, and we have one of the managements with us.
Yes, absolutely. Well, let's talk to Granules. Granules India is the first management on the show. Q4 FY25 revenue was impacted by price erosion. Their R&D spend has risen in FY25, and the company is probably going to increase R&D expenditure going forward. We have with us Priyanka Chigurupati, who is the Executive Director of the company, joining in to discuss the business going forward. Priyanka, hi, welcome to the show and good to see you on air. Just wanted to start by talking to you about, the Q4 which has gone by. It was a quarter which was slow in terms of the revenue, which was up only around 2%. You were impacted by price erosion, demand issues in the API segment as well as the PFI segment. And you also had that warning letter on one of your Indian facilities. Give us a sense in terms of what Q1 is looking like and what is the outlook for FY26?
Well, good afternoon, Ekta and Mangalam. I think just to start off with the first part of your question, Q4 was a little bit muted, but if you look at the overall numbers, I still think we did rather well despite the situation that we went through. If you look at the overall margin portfolio, our top line stayed a little bit, actually it grew 10%, and more importantly, our bottom line, which is more important, grew almost 24%. So I think we did rather well despite the entire scenario. Now, in terms of the situation we have on hand, I think we'll take another 1 or 2 quarters to clear the warning letter, hopefully, and back soon after that, everything will be back on track. So Q1, again, we are still focusing on remediation activities, which will happen in Q2 and Q3 as well. And post that, we should be full running up to 100% capacity. Well, up there. I wouldn't say 100%, but up there.
Right. But if you could, give us a sense, currently we're in this VUCA world. We have a fair amount of uncertainty. There's higher crude prices. There's geopolitical tensions across West Asia. How is that likely to impact the API or PFI prices? Is there anything that you're seeing on the ground right now?
Well, right now, I just think it's a demand-supply issue, at least for the products that we're in. And the products that we're doing really well on, it's primarily a demand issue. So we're actually supplying everything we can, and we have more demand than we can supply. So we're actually doing pretty well. The only product where we're facing a little bit of headwinds is Paracetamol API. That's because of oversupply in the market today. And going forward, I see that easing because we're doing a lot of business development activities to focus more on value-added para products.
So how much have paracetamol prices, API prices been depressed, say, as compared to a year ago? And what is your outlook in terms of prices?
Well, if you ask me overall, I can't really put a number to it because it depends. If there's APIs, PFIs, and finished dosages, and then it's also very region dependent. But I would say that there has been a decline. But there's also now people coming up with the issue of steady supplies. That's coming back more aggressively than ever because there have been some entrants into the business claiming that they can supply, but they're not able to. So I see an opportunity for us going forward.
Okay, so you are seeing some opportunity in terms of paracetamol API prices probably stabilizing. Yes. Just wanted your, sense in terms of how you're playing the GLP-1 opportunity. You've bought this Swiss CDMO company, Senn Chemicals, in April. That's going to give you, a foray into the peptide segment. GLP-1 is going off patent. Semaglutide is going off patent in emerging markets as well as India. Tell us, how are you capitalizing on it?
Like you said, the GLP-1 market is massive and is projected to reach, if I'm not mistaken, about 150 billion USD by 2030. The US continues to be a major market for the peptides. But if you take a step back and just look at the reason we acquired Senn Chemicals, we wanted to leverage Senn's strength in the CDMO space. They already have some business with some innovator companies. So it was a company that we acquired for the technology. And of course, it has some revenue already in place. Now, apart from our entry in a small way into CDMO, we are going to be focusing on some GLP-1s. We're working on a couple of APIs right now, and also some finished dosages through some partnerships. And we'll see how that goes through. Once we see some headway in there, we'll certainly keep you posted.
Right. You've spoken about, 1 or 2 quarters of remediation for Gagillapur. Just wanted a little more on is there a possible re-inspection that happens out there? There are some drug approvals which are pending as well. And how are you looking at growth X of Gagillapur?
Growth X of Gagillapur, first of all, let me just reiterate something. Gagillapur is functioning fully. Whatever reduction in quantity that we have done has been very intentional to focus on remediation activities. So we hope that in the next 1 or 2 quarters, we have a correspondence or dialogue with the FDA, and I would believe that they will come back for a re-inspection, which we will be fully ready for.
By when do you expect that?
Well, it depends, right? I can't put an exact date to it, but we're hoping by end of this year or latest by Q4 fiscal, we should be.
No, I'm asking from this in the sense that when exactly does your remediation get completed, and hence, you can assume maybe a quarter or 2 from then on.
See, remediation, we are in the, I would say, last phase of remediation. So I think in a quarter or about 4 to 5 months from now, we should be done. And post that, but we are continuously sending correspondences. We're sending our updates to the FDA, and the FDA can come in whenever they want to, but we expect them to come later half of this year. And by the end of this year or Q4 fiscal, we hope to have everything.
Right. So let's look at it from the other angle then. Gagillapur, ex-Gagillapur, growth continues the way it is. Once the remediation happens, what's the incremental revenue that you see from that?
Well, first things first, we have about 11 launches just in the US that are still pending. And all of them are beautiful launches. So personally, I'm waiting for that to happen. So we are already gearing up for those launches. So as soon as we receive approval, boom, we'll hit the market. In addition to that, like I said, right now we took a little bit of a reduction in overall production just to focus on remediation. So incremental to the launches will be the volumes that we actually can manufacture at peak capacity. Then outside of Gagillapur, we also have GLS, the Genome Valley facility, which has already been commissioned for some products in the US, primarily monograph products. We're also expecting the FDA and other EU authorities and other regulatory bodies to come and audit that site over the next couple of months. And so we'll see incremental business coming from GLS as well.
Okay, so that's what I wanted to ask. You have 2 plants in the US?
Yes, we have 1 packaging facility and 1 manufacturing facility.
All right. So any kind of transfers that you're doing from the Gagillapur plant to, say, the US facilities simply because it meets the onshoring criteria, as well as the fact that, it'll mitigate the risk?
Well, the US facility has always been built for small volume, high value products. So any site, forget just our site, most sites, let me preface that, most sites in the US will not be extremely cost competitive when it comes to, say, an Indian facility or anything, say, a Chinese facility. So we are to mitigate risk, just in case, but the most important products for us. So we have done it. We have some BCS plans in place. We already have some tech transfers done, but the possibility of launching them from there, except for certain segments of the US B2C business, are very minimal.
Okay, I just wanted to ask you about the capex plan as well, because you do have capex plan for your peptides. You have debt of around 700 crores on your books. If you, how exactly are you planning to fund that capex? How much is it going to be in terms of the peptide opportunity? And what does that do to your balance sheet?
Well, if you look at the overall net debt, it has been going down pretty well, even from last quarter to this quarter. Now, in terms of the overall capex for FY26, we have about 600 crores planned. I'm not saying everything is for Senn as of now. We have about 200-ish crores still that we have to pay for Senn. But apart from that, as of now, we're still gearing up on the commercialization of Senn, which we'll announce once we have that concrete. But apart from that, our capex for this year is essentially for every other expansion that we're doing, including some onco APIs and onco FDs, because we had, like I mentioned, or in our earlier call, we are focusing heavily on oncology. We filed 2 products, and we have about 11 in the pipeline. So we need some capacities already. We're already envisioning some lack of capacities once we launch them into the market.
So this implies that FY26 will be a year of, you building on the capacities and getting your ducks in the line, and thereafter FY27 onwards is where we can see growth accelerate. So to that extent, could you give us a guidance for what kind of revenue growth can we foresee? Margins around 21% in FY25, do they sustain at these levels? And thereafter, FY27, FY28, what's the kind of vision that you have?
Let's just say for now, margins will sustain, but we obviously are planning, are strategizing, and are working towards improving the margins for sure.
That's the margin picture. What about the revenue? Because last 2 years, they were stable at around that 4,500 crore mark. This year as well, what's the growth projection? And the year after that, once you hit full throttle?
I'm not saying that revenue is not going to be a focus, but I would say margins will be more of a focus because of the kind of products and kind of business that we're trying to do right now. If you look at the segments that we're present in, earlier it was more backward integrated, high volume commodity products. Now we're doing really well in ADHD space, which we're expanding a few products globally. Then we're doing oncology and then peptides. So it'll be both, of course. It'll be revenue and margin accretive, but I would focus more on margins.
Okay, just a quick last question. In terms of your pipeline for oncology products, how many are you probably looking to launch in FY26 in the US?
FY26, nothing. We're just doing some API, small API business, but our first oncology business or product will be launched in FY28. FY27 possibly depending on some patent situations in the rest of the world. But in FY28 will be the first US launch.
All right, Priyanka, we're going to leave it on that note. It's been a pleasure. Thanks very much for joining in and speaking with us. So that is the management of Granules giving us a good picture in terms of what we can expect for FY26. They do expect capex of around 600 odd crores. And they have been reducing their net debt, which currently stands at around 700 odd crores. They will be focusing on margins as compared to revenue growth. And they are looking at probably resolving the US FTA issues in the next couple of quarters on one of their Indian plants. We'll take a short break, but coming up, we'll focus on a lot more stocks and news on the other side. Stay tuned.